Hello friends, I welcome you in this session. In this session, I will be discussing the previous year questions of 2019 which have been asked by the UPSC in the economy section. So I will be discussing the questions and I will be giving the explanations. My name is Rahul Kumar and I have an expertise in the economy and the other areas. First of all, the topic that we'll be picking will be the banking sector. Every year, minimum 5 questions and up to 10 questions out of total 100 questions are asked from the banking sector. So this forms the very crucial area from which the questions are asked. And in 2019 also, the 5 questions were asked. The questions were both conceptual as well as the factual, right? So conceptual as well as factual, both questions were asked. Let us see the first question. The first question is regarding the money multiplier. So the question is, money multiplier in an economy increases with which one of the following? So the question is about increase in the money multiplier. Increase in the option 1 is increase in the CRR, cash reserve ratio, increase in the banking habit of the population, increase in the SLR, and last option is increase in the population of the country. So before we move ahead, first let us understand the concept of money multiplier. First of all, what is money? Money is something for which we can exchange another thing. So this is acting as a medium of exchange. This is acting as a medium of exchange. So it can be in the form of currency. The most visible form of the money is the currency, the cash that we have in our pockets. Another term is multiplier. Now this is very crucial. What is multiplier of the money? How does that money multiply? Right? So in an economy, let us see how money gets multiplied. So we have the Reserve Bank of India. Reserve Bank of India is the issuer of the currency, right? So it issues the currency. Now, when the Reserve Bank of India issues the currency to any person, for example, Mr. A, let us suppose rupees 100 have been issued by RBI to the Mr. A. Now, what will Mr. A will do with this 100 rupees? So Mr. A will go to its bank, Punjab National Bank for example, and it will deposit this money, rupees 100. What will PNB do now? The Punjab National Bank is the bank and the business of bank is to earn the profit by accepting the deposit and giving that money as a loan to the general public. So the Punjab National Bank, as a part of its business, will lend this money to Mr. B. Now, the question arises, how much money PNB, Punjab National Bank, can lend to Mr. B? Can Punjab National Bank lend 100 rupees or more than 100 rupees or less than 100 rupees? So, the answer is, it can lend less than 100 rupees. It cannot lend the entire amount because Punjab National Bank is supposed to keep some of the money with itself and some of the money with the central bank, the Reserve Bank of India. So this money which the PNB has to keep with itself or with the RBI is called the reserve. It is called the bank reserve. So out of 100 rupees, let us suppose the PNB keeps rupees 20 as reserve. So this term reserve we will explain it in detail after this discussion. So now how much money PNB can lend? PNB can lend 80 rupees. So Mr. B gets rupees 80. Now will Mr. B get 80 rupees in the cash form or in the form of bank deposit? So the answer is, it will get in the form of bank deposit. What does that mean? That means that PNB will open an account of Mr. B in its bank and deposit this 80 rupees of loan in that account. So this 80 rupees automatically becomes the deposit of Punjab National Bank. So again, the Punjab National Bank gets the deposit of rupees 80. So the first deposit was the deposit of rupees 100 and the second deposit is deposit of rupees 80. Now again, the bank will keep 20% amount as reserve. For example, rupees 16. So now how much amount it can lend? So it can lend 64 rupees to Mr. C. And this process continues. This process continues. Right? So this process is called the money multiplier mechanism. And how the money is getting multiplied? Can you see? First 100 rupees, then 80 rupees, and now 64 rupees, and so on. So the 100 rupees currency note which was issued by the RBI has multiplied itself into more than 200 rupees. And it can multiply again and again. Now, the question arises. Now, please be careful at this point of time. I am going to show you the relationship between the reserve and the money multiplier. The relationship between the banking habit of the people. So, now, if Mr. C has to get a loan, when will Mr. C get a loan? Mr. C will get a loan only when Mr. C requires a loan. He goes to the bank and asks for the loan. If Mr. C do not ask for the loan, bank will not give the loan. So, banking habit actually plays an important role in the money multiplier mechanism. If Mr. C will not ask for the loan, no loan will be given. So, banking habit, if the banking habit is less, then money multiplier will be less. If money multiplier has to be more, that means the banking habit has to be more. And banking habit more means the people have to deposit more money into the bank. They have to demand more money as a lending in the form of credit card, in the form of home loan, car loan, business loan, education loan, right? So, we take the example, for example, till 2016, there was demonetization. In 2016, there was demonetization. Before demonetization, if you see the habit of the people in terms of banking, it was less. In 2016, the entire money was deposited into the bank accounts. And now, comparatively, the banking habit is more. So, can we say that after the November 16, money multiplier mechanism has been enhanced, and this is true. This is true. So, this is how we can relate this with the day-to-day life. Now, coming back to this question, so one thing is very clear कि अगर banking habit improve होती है तो money multiplier बढ़ेगा. Now second relationship, the relationship with the reserve, कि अगर reserve बढ़ेगा तो money multiplier कम होगा या ज़्यादा होगा, क्या relationship है उसको देखते हैं. Okay, so in the discussion we took the example of 20% as reserve. So when 20% is the reserve, then 80 rupees is the loan amount. Now let us say the example. If this reserve is reduced, for example, now out of 100 rupees, only 15 rupees is to be kept. So reserve is reduced. Now when reserve is reduced, that means bank can give more amount of loan or less amount of loan? Definitely more amount of loan. Now it can give 85 rupees of loan. Again, Mr. B will deposit 85 rupees here. So here the amount will be 85 rupees. Out of 85 rupees, again 20% will be kept with the bank. Sorry, not 20%, 15%. 15% is the revised amount. So 15% will be kept. So approximately this amount will be rupees 13. Now how much money the bank can lend? The bank can lend 72 rupees. So Mr. C will get 72 rupees now and he will deposit back 72 rupees back. So can you see that when the reserve amount is reducing, the money multiplier is increasing, and vice versa. So if reserve is increasing, money multiplier is decreasing. If reserve is decreasing, money multiplier is increasing. So there is a inverse relationship between the two. Now let us see this process with the help of this small picture. So you can see that rupees 100 is the amount that has been introduced by the Reserve Bank of India into the system. Rupees 100 goes to the bank, and bank gives this loan to Mr. A. Mr. A has this money in the bank, and now 5 rupees is kept by the bank as a reserve. That is actually cash reserve. There are two kinds of reserve. One is the cash reserve ratio, the amount which is kept by the bank with the central bank. And another is the statutory liquidity ratio, the amount which is kept by the bank with itself in the liquid form. So we are taking only one reserve for the sake of simplicity, that is cash reserve ratio. So rupees 5 is kept as the CRR, that is a reserve. 95 is given to Mr. B. 95 rupees of Mr. B gets back to the bank. Now again the bank keeps 5% as CRR and gives 90% loan to the Government of India. Government of India has its account in the bank, so again 90.25 rupees comes to the bank, and now again 4.5 rupees, that is 5% of the 90.25 is kept by kept by the bank with itself, and 85 rupees is given to the company. So this cycle continues. So this picture actually is an indication of the same example that I gave in the previous discussion. Now coming to the reserve, what is the meaning of reserve? So reserve is the currency deposit, the currency which is lying with the bank but not lent out, but the bank has not given as a loan. But why the bank will not give as a loan? Because certain amount of money has to be kept with the bank so that the bank can survive, so that if there is an emergency in the economy, the bank can give money to its depositors, so that when there is a crisis, when there is a sudden withdrawal of money by the depositor, the bank can give the money back to its depositor, so that when the loan takers, they are not giving back the loan, the bank has some money to operate its business. So the recent example of PMC Bank. So in the PMC Bank there is a liquidity crisis. So that liquidity crisis is being handled with the help of the available reserves. If reserve wouldn't have been there, then PMC Bank will not be able to give even 1,000 rupees or 10,000 rupees to each of its depositor. Right? So this is how this reserve is important. Now there are two types of reserve. One is some amount which is kept with the bank in the cash, in the form of cash, which is called as CRR. This is kept with the central bank. In case of India, this is Reserve Bank of India. Some amount is kept with, so this is the CRR only, and some amount is kept with itself. So the amount which is kept with itself is held in the form of liquid assets, and the most prominent form of the liquid assets is government securities, right? And this amount is called SLR, statutory liquidity ratio. So I am discussing these concepts because these concepts have been actually referred to in the question. Now, fractional banking. So the entire system that we just discussed, whereby the bank keeps certain percentage of deposit with itself and lends back the rest of the amount. This process is called the fractional banking itself, right? So this question belongs to the fractional banking. So what is fractional banking? This is the bank keeps some percentage of the deposit as reserve. So reserve means CRR and SLR, and rest is given out as a loan. Such a system allows bank to boost the money supply and play an important role in the economic growth of the country. Money multiplier formula is used. So what is the formula of the money multiplier? The formula is initial deposit. For example, rupees 100 multiplied by 1 divided by reserve requirement, right? So let us see the formula. The formula is 1 upon reserve ratio. So for example, rupees 100 is a deposit, and reserve ratio is maybe 20%. So how much can be the money available after the money multiplication process? So the money availability can be rupees 500. If this reserve ratio is less, suppose 10%, then how much can be the money multiplier? 1000 rupees. So you can see, with the decrease in the reserve, the money multiplication is increasing, the availability of the liquidity is increasing. Now let us come to the question. Now I have explained this question from all the possible dimensions. I know that this has taken some time and you may not be expecting this much time for discussing this question, but my purpose was to ensure that each of your concept is clear, because this question seems very simple. This is simple but conceptual also. Now coming to the question back, money multiplier in an economy increases with which of the following? Right? First is increase in the CRR. So we have already seen, if CRR increases, money multiplier decreases. So this answer is wrong. Second, increase in the banking habit of the population. Yes, when the people demand more money from the bank, when they deposit more money into the bank, then money multiplier will increase. Third option, increase in the SLR. Again, if the reserve is increasing, money multiplier will decrease. So this answer is wrong. Increase in the population of the country. Population has nothing to do with the money multiplier, right? Not direct relation. They can be indirect relation, but directly there is no relation. So this option we can also eliminate. So the answer is option B, increase in the banking habit of the population.